was pretty cool.
Earnings season has once again started and brought a slew of headlines as companies have been reporting relatively strong results, navigating things like tariffs and Fed policy. So I do want to bring in my next guest to talk more about what the takeaways are and, of course, where we head from here. Joining me now is Christine Short. She's head of research at Wall Street Horizon. Christine, great to have you in studio this morning.
Great to be here.
Yeah, and how far along are we in this earnings season, and where do we stand so far?
Yeah, we're in the final peak week, actually. So the rest of the earnings season is really just going to be focused on retailers the next couple of weeks, but we're 90% of the way through S&P 500 reports, and it's been a stellar season, like you pointed out. We're up to growth of close to 12% for the S&P 500. We started with only expectations about 4.8%. So that's based on the high number of beats. About 81% of S&P 500 companies have beat on both the top and the bottom line. That's higher than we've seen the last 1, 5, and 10 years. And not only that, but the margins by which they're beating are higher than we've seen historically. So beating on bottom line by about 8.4%, top line by 2.4%. As you know, we've had these conversations. Revenues have kind of been struggling the last few quarters. So to see them kind of come back, see robust revenue growth driving that earnings growth has been a really positive signal this earnings season.
And of course, we pair that with the inflation data that we got yesterday. How does this set up equities as we head into the tail end of summer, really?
Yeah, so we're still kind of peeling back the layers of that inflation report, right?
Yeah.
On the one hand, it came in a little tamer than expected. So you saw investors really happy to see it come in at 2.7%. The expectation from Dow Jones economists was 2.8%. But that core CPI number came at 3.1%, an uptick of 0.3%, month over month. That was the highest increase in 5 months. So while, this might be a good thing for Fed, Reserve to cut interest rates come September, that's what we saw traders saying the probability popping it up to 94% of a September cut if you looked at the CME Group's FedWatch tool. I think it's not just that number came in a little softer than expected. It's that the jobs numbers also came in weaker than expected, not just for July, but the revisions to June and May. And perhaps that means the Fed will still, go ahead and cut rates in September, which investors are looking for.
Yeah.
But what I really want to see is the reaction when we see retailers report. So How has this impacted the consumer? We know prices have gone up. We know the consumer has been softening. They've been keeping up and resilient with higher inflation over the last year or more. And it's starting to weigh on them. We've seen that in credit card delinquencies. We've seen that in consumer spending. So what do names like Walmart, which reports next week, what are they seeing? Are they still seeing high income shoppers trading down? That's obviously they've been a winner in this environment. But what are the retailers seeing on consumer spending?
Yeah, and I do want to get your gauge, Christine, as we await those retail reports from NYSE listed Target, Walmart. They do give us, as you mentioned, a good sense of that. What we've been gaining from some of the other sectors, and perhaps particularly technology, with so much news on the semiconductor space unfolding in real time.
Right, that's clearly what's been driving this rally. Since the April 8th lows of the S&P 500, tech is up about 50%, the tech sector of the S&P 500. That's more than the benchmark. I think only industrials and tech are up more than the S&P 500 since April 8th. And so this has really been driving the market. And it's things like today's IPO of Bullish, a stable, in the crypto and the AI space. The fervor there is what's driving the momentum in tech. I really don't see that ending. Usually we see the S&P 500 ending the year on a high. November and December are typically very strong months. We know the fundamentals are strong. The VC confidence is there, the investor confidence is there. But if you look at a whole, it really is, again, a tech story where we've seen some broadening out into other sectors, but the top 8 holdings in the S&P 500, it's the Mag 7 plus Broadcom. Those are what's driving the returns right now. Those are driving the equity markets. And there's really no sign of that cooling, with the exception of some sort of exogenous shock.
Yeah. So we did have a guest on earlier talking about this bullish IPO, and specifically, what has kind of happened for this crypto space just in the past year, that the policy has become more favorable for cryptocurrency in particular. During this earnings season, how have we seen companies of publicly traded firms address changes in policy in Washington?
I mean, it's good for all, right? Like a rising tide lifts all boats. I think it's been favorable for the tech sector overall. Certainly, it's been favorable for some of these companies that have been on the sideline, these private names that didn't want to debut in 2024, both because of regulatory issues as well as seeing other companies IPO not do so well, right? We had some names publicly debut last well, and they just tanked afterwards. I think seeing the names like Bullish, we'll see where Bullish goes today. Like you said, they revised to $37 a share. The expectation was 32 to 33. That may be because of what they saw with Figma a couple weeks ago. Pricing way under, they're triple what they were priced at when they debuted. You've got CoreWeave, you've got Circle. Circle up 450% from where it debuted. I mean, these numbers are mind-blowing, and they're down from their highs. So it's been a bit of a roller coaster.
Yeah.
But these names are still way up from where they debuted, and that's so positive. And we've seen the VC funding. The funding is increased because there is some confidence around going public once again, whereas we really had been missing that in 2024.
Yeah, Christine Short, head of research at Wall Street Horizon. Christine, always good to have you, and thanks for the check-in.
Yeah, thanks again for having me.
Yep.